right, so welcome to Game Plan Sunday. Today is September 26, 2021. Last week of the month. You got to go ahead and get that payroll popping off, okay? You got to get the payroll popping off. It's the end of the month. Let's go ahead and get to the finish line here. Had a pretty interesting week in the markets last week. Started off on a really weird note. You guys know all the headlines has been all about Evergrande. So really, all the news is all about, Evergrande, this whole debacle with this giant real estate company that's in China, and they're defaulting here. So, and the question is, who's in bed with this company? So all of that's going to be playing out, or, if China's going to, come in and bail out, which I don't think they're actually going to do, but I don't think they're going to let it, just tear up the markets. But it has been a major concern in the markets this week. So that kind of took the headlines. On top of that, we had the Fed's meeting this week as well. So those who've been in the chat room, you guys know we're watching it live in the group together. We're doing our own commentary right in the chat room. So you guys get to, express yourself and your thoughts about what what you're hearing from the Feds. You know what I'm saying? Like, it's important, right? So definitely want to encourage you guys to, get involved, on the website right here. Get in that chat room right there every day. All right. You can do it from your phone. It's a great place to be with other like-minded people. Not exactly the same, but you have other traders and investors that's in here. And we're, watching the markets, finding the plays. Caught some really nice plays this week. Shout out to Jonathan. No, he's not here right now, but definitely has some good plays in him. Terry, shout out to you guys for those good plays. Keep them coming. So let's take a look here and see what I got. All right. So basically, to kick off, just a review of where we were with the indices. Oil had a nice 2.97% gain. The Dow Jones was up 0.62%. S&P 500 up 0.51%. The Russell was up 0.50%. The dollar was up slightly, 0.03%. The NASDAQ was up 0.02%. Gold was down slightly, 0.19%. And Bitcoin was down negative 8.22%. So the biggest winner last week was oil, up 2.97%. And Bitcoin was the biggest loser of the week, down negative 8.22%. And Bitcoin, you guys know this thing right here is, the roller coaster of all roller coasters. So, negative 8.22% isn't that bad for that, for that asset class. Taking a look at the sectors here, we had the energy sector was up 3.20%. So energy is seeing some nice movement there, piggybacking off of oil at the same time. So I think we're going to have those in focus this week. We had the financials that were up 1.70%. Definitely want to keep our eyes on the financials, in particular like Bank of America, looking pretty good. We had technology that was up 0.79%. The industrial was up 0.52%. And consumer discretionary was up 0.43%. Materials was down negative 0.32%. Healthcare was down 0.77%. Communications was down 0.83%. Consumer staples was down 1.04%. Utilities was down 1.90%. And real estate was down negative 2.01%. So when it comes to the sectors, energy led the way, up 3.20%. And real estate was the lagger, down 2.01%. All right, so let's actually go over some of those stories that we had popping off here. Really don't want to go so much on Evergrande. Like, I think everybody played that one out last week, but just a little glimpse of that. We have some of it here on the website here. All right, so basically, China's Evergrande edged closer to default, threatening growth in a slowing economy. Evergrande is China's biggest developer with $306 billion of liabilities on 778 projects in 223 cities. The big unknown contagion, investors chasing yields, and Chinese corporate bonds are taking a hit. Evergrande has been funded heavily by specialty lenders and trust companies, which may have ties to banks. Retail investors have exposure through stock and wealth management accounts. Evergrande was able to resolve one payment. The other, on $83.5 million, is unclear. So again, big news there. What's interesting about this situation is that their whole model, like how they take money on projects in advance, They have so many projects that they're not going to be able to get done, and they collect a lot of money from people up front. So people are having riots, protests about this situation because they know they are done. And it's going to be interesting to see how this thing unfolds. A lot of people was comparing it to the Lehman Brothers collapse here that happened in '08 in the U.S. And here you guys can see on the screen the largest defaults, just so you can see them in size. The Lehman Brothers was 630 billion, Evergrande 300 billion. So not quite Lehman. All right, but bigger than Greece and bigger than Argentina. You can see that. All right, so just a little bit on that. And here's an interesting article about a guy that actually, predicted this whole situation, who was banned from trading in Hong Kong. I left this story here for you guys to take a look at it. Andrew, short seller Andrew Leff, warned investors of Evergrande's looming insolvency nearly 10 years ago and was banned from trading in Hong Kong as a result. So again, this is a good article here. You guys can get some more insight on that situation, but it is not good. All right. So we've seen quite a few big hiccups. If you guys can remember, not too long ago, we saw the Bill Wong situation. Y'all remember that? With the whole Archegos Capital collapsing. That was interesting. Now you got this whole situation collapsing. I'm telling you, we're in a really, really interesting economy right now. And no matter what they say, this thing is sick. It is not good. Not at all. All right. And checking out this little headline here. U.S. Treasury Secretary Yellen asks Wallstreet CEOs for assistance with the debt ceiling. This is interesting because at the end of the month, they had to get this whole debt. They were supposed to get this debt ceiling situation resolved, which pretty sure it's not going to get resolved. They're going to end up having to suspend it. And basically, I think the House representatives, passed some kind of resolution. But this week, we should hear the Republicans reject it. So the Senate is going to kill it on arrival. Again, government got to keep raising this debt ceiling. We're in so much debt, there's no way we're ever going to be able to get this out. And I tell you guys often that history is a good teacher. I don't know how many times I tell it to you, but to help you guys understand a lot of that stuff, we actually provide some help for you on that in a way that's not so nerdy. You take a look at the groups channel that we got over here, groups. All right. So we have crypto and we got legends and gurus and we got movies, films, and documentaries. I encourage you guys to check out the group movies, films, and documentaries. All right. When you get up in here, you'll see this is what it looked like. So you guys can share movies, films, and documentaries that are market related. If you think that it's going to add value to somebody's life, something that you learn something from, man, come in here and share it. All right. We don't have to be such nerds. All right. After this, I'm going to be watching Billions. Okay. Because Topaz and Mark, they don't put me on Billions and I'm feeling that. So that's one of the things. So if you go over here, you can check where it says discussions and you can see all of the different, ones that I posted in here for you guys to check out. These are all the things that I've watched. All right. So again, you guys are in the game to learn. This is a way that you can learn without being such a nerd, but something that can be really entertaining, by watching something. So all of these different things are good things that you guys can watch. We got like 2 pages of all of this stuff here. So definitely encourage you to watch it so you can get some insight on it. Doesn't matter if we're talking about historical context of economies and stuff like that. All of it is in there. All right. So check that out. All right. And then y'all let me know how you feel about it. You feel me? Like go in there, leave some reviews. Let us know how you feel about those documentaries. Did you like it? Did you not like it? What did you not like about it? What did you like about it? Like, it's the same thing like you do on Facebook, except we talk a bunch of garbage on Facebook all day. But if we can get it popping over here, we can just drop straight value all day. Think about how much of a better person you will be. I'm tired of arguing with the Facebook people, man. These people are nuts. All right. So anyway, you guys check that out. We can see that we had the FOMC minutes meeting here, which is posted on the website. You guys can check that out. And the insight from this whole meeting, or what was meaningful, was that the markets were paying attention to, Powell basically saying that, they plan on ending this program. They're tapering their bond buying program by summertime of next year. Investors were expecting this whole situation to continue to the end of next year. So they think that, okay, well, they got to, clean these balance sheets up by, summertime next year. They got to go ahead and start at least by November to start offloading. And so when we saw that, we saw rates, jumping out the gym, which we'll cover that here in a second. But you guys can see even right here on the sideline over here, the mortgage rates, home mortgage rates is built in here. You guys can see that when things were up. So they were down, in the 2 range. And now it's, 3.13. Like it's a nice jump, week over week. And since I'm on this topic, let's go ahead and pull that up here. All right. So taking a look at, these are the yields here. Okay. These are the bond yields. And in fact, what I'm going to do is I'm going to show you the bonds first. All right. Let's just go to TLT. All right. Okay. And in fact, let me just go to the 10-year since I'm looking at that. All right, so this is the 10-year bonds right here. And you guys, if you've taken the time in the markets class that's on the website, then you already know how this parity works. As bond prices go down, all right, what happens in the inverse? Bond prices go down, bond yields, they do the opposite, they go up, all right? So you see the prices went down, that's after the meeting, all right? And you see the yields going up right there. See that? Okay, so we see the yields, they are going up. This is the 10-year, by the way. Looks like we had a nice little bottom. Let me switch that to red. All right. Okay, here we go. So you guys can see that floor was like right there. It's been bouncing up and a really strong jump right here. Question is, do we continue to go higher? All right. And I think that's a strong probability that those yields go higher as well. Now, this is interesting because as these yields go higher, it impacts credit for everybody. All right. You're trying to get a house, all of this is going to, your rates are going to go up. As those rates go up, it's going to price people that were in the bottom of the market out of the market from being able to buy homes and things like that. So definitely want to keep our eyes on that, because this could have a negative impact on the economy if these things continue to rise. All right. So that's going to be interesting. Okay. And we got a bunch of housing data that's going to be released this week as well. So we'll be able to follow back up on that a little more. All right. Let's get us back there. All right. And speaking of that, what's interesting is that you guys remember that we had these forbearance situations pop off. Looks like we did get some type of headline about the FHFA extended the availability of the COVID-19 forbearances. So they're supposed to end, again, a lot of this stuff's supposed to end the September 30 or the beginning of October, but we're seeing them continue to push these things forward in the future, which again, we're seeing a lot of craziness in the markets. There's chaos all over. There's no real price discovery. Seeing people getting priced out of the markets. Single family homes, first time home buyers are getting priced out of the market. Inventory is supposed to be coming back to the market, but with them extending this forbearance stuff, don't really know how well that's going to be. So, but yeah, all of that came from this. And what was interesting, I saw my man, Northman Trader, he put in here about the amount of people that was watching the conference, right? It's like 13,000. I think it was, like 14,000, somewhere around there. But, I had a comment in here that welcome to the matrix. You are the woke, because everybody else is just not paying attention, right? And so from your friends, people that's on your friend list and stuff, like, who are you able to talk to about these things in the markets actually understands? Like when you go to the social media platforms, nobody's talking about this stuff, but this stuff is important. This is what makes the world go round, right? So it is very important, but that's why you need to have a community to understand these things. But anyway, if you guys are paying attention, you are amongst the woke, okay? Everybody else is sleep in the matrix, all right? All this stuff is what's happening. All right, so let's see, debt trap, there we go. Existing home sales fall in August. So you see, again, I was telling you guys about the home prices. They're out of this world right now. Inventory, demand, everything is out of whack. You see some home sales start to fall in August. Not a good sign. We will continue to watch that development. Terry posted in here the U.S. weekly jobless claims total 351,000, topping 320,000 estimate. So you got to remember the unemployment weekly unemployment that comes out every week. I really haven't been paying attention to it because it's been stuck in the same place. But, ideally, you want to see the unemployment go down for a growing economy. But in this case, we're seeing unemployment tick up. That's in the wrong direction. So the estimates were that it was going to be 320,000. Instead, we got 351,000 print. OK, all of this, again, is negative for the economy. But, bad news is good news for the markets, especially if they're, anticipating the Feds to come in and save the day. However, it's destruction in the economy. So, but shout out to Terry for that update. We also have the full report here in the on the website, so you guys can check that out as well. Political risks are mounting in Washington. Here's what to watch. You guys can check that out as well. It says the debt ceiling, government funding, and President Biden's economic agenda are all caught up in partisan maneuvering as key deadlines approach. So again, if they don't come to a conclusion, we talked about this earlier, government could shut down. But government shutting down hasn't really been a market moving situation. OK, so I wouldn't put too much weight on it. Should it shut down? Don't panic if you hear it in the news. Like, they shut down all the time and it doesn't really have any impact on the market. Now, it could have an impact on the economy that can then translate into the markets. But, just from history, we haven't seen much, activity from that. But it's just something so that you are aware of what to expect. And again, all of this is taking place this week about this whole debt ceiling thing. And I believe they're going to suspend it. I think the Democrats got the ability to, push this thing until December, until like December. But we'll see. All right. U.S. Congress quietly sneaks in crypto bill amendment authorizing central bank digital currency. All right. So let's talk about this. All right. Bitcoin was in the headlines. China came out and said that they're banning Bitcoin. Bitcoin crypto, took a nice stab, fell, but not too bad. OK, but it did fall. And it's not the first time that China has said to ban, but to say they were banning it. But it's supposed to be like their biggest measurements of banning. Right. Like, you can't trade it. You can't do none of this stuff. Now, what's interesting about this whole situation is what is the punishment going to be? With China banning Bitcoin, there has to be some type of punishment, which they haven't announced just yet. But I imagine once they announce whatever that punishment is going to be, Bitcoin probably is going to fall even further. So you got to understand, and I tell you guys this all the time, history is a good teacher. I know a lot of people have capitulated from their stances. I got people who were sound money people that's just jumping on the Bitcoin bandwagon. My position has not changed. My foundation fundamentals have not changed. My understanding of how currencies work, money work, how governments work has not changed. We have over 5,000 years of history to learn from. You pay attention to all societies in the past. Governments always have a need to control its monies. OK, understand that. And before I even get into it, I'm going to actually give you guys a couple of little quick reads that you could check out. You got my man Murray Rothbard, Dr. Rothbard. OK, this is a small, nice little book. You guys can read this in no time. OK, it's called "What Has Government Done to Our Money?" For you guys out there that want to understand this whole money situation, y'all want to trade Forex and all of that, you need to understand this stuff. OK, all right. And the case for a 100% gold dollar. OK, I'm gonna just recommend these for you guys. And if you really want to deepen your studies, which I've been doing here from the master teacher himself, Louis von Mises. OK, this book, The Theory of Money and Credit. So when I'm speaking about these things and people want to debate, you understand this is my foundation, understanding Austrian economics of how these things work. Not about hype, not about a commercial that you saw on YouTube, not about some celebrity person who's just buying things. I'm telling you from history, it has not changed. And I don't believe that it will change. Don't mean that I will be right, but more than likely I will be right. Because again, history, it's nothing new under the sun. It's always the same. So understand when you're dealing with Bitcoin, right? So Bitcoin, again, understand what it represents. Bitcoin represents a direct threat to central planners. So I actually like that aspect of Bitcoin. Okay, I like the aspect that it's not centralized and controlled by governments. Okay, I think that's a plus for Bitcoin. on the back end side, I believe that Bitcoin is a Trojan horse. Whether it's purposeful or not purposeful, not intentional, that's what it's going to be used for. Okay, so understand governments. Listen, you can't bail out your economy if you can't control your money. You understand this? Think logic. Bitcoin is something they can't control. All right. That's why a lot of people like it. But for the same reason people like it, it's the same reason it will be killed. Okay. Doesn't mean you can't speculate and make money right now. I encourage you to, if you're going to be speculating, don't marry the thing. Okay. Topaz, tell them how we treat stocks. We treat stocks like thoughts. Okay. Same thing with crypto. The problem is a lot of these new guys, they are marrying it. No, you don't wifey these up. Okay. If you're going to make your money, make your money. The problem is a lot of the new people that's pumping it, they're not really making money. People talk, listen, the whales are the ones who are making money. And it's all pumped up off of the greater fool theory. Who can you sell to that is willing to buy it at these super high prices? Like, what is Bitcoin in the first place? Okay. You don't need a digital money. Money's already digital. So it doesn't solve any real thing. All right. It's mathematics in the computer world, but you're exchanging real goods for something that's fake. It's kind of like, buying, what do you call it? V-Bucks in the Fortnite game. It's exchanging real money for fake money. It's not, real value here. But that's besides the point. The main issue here is that what I'm telling you is that the government is going to outlaw it. So even Ray Dalio's came out and talked about it. You got Jim Rogers, all these legends. And I tell you guys, we got the legends and gurus right here. Their thesis is in here. All right. You go in there, you can search, even though some of them are holding it because bonds, the Federal Reserve, the Fed's, intervention in the market is driving away what normally would go into safe havens. So risk is on right now. There's no safe haven really, except for gold. But gold is more of a storehold of wealth, not as an investment. Okay, so Wallstreet don't do gold, right? So they're just trying to find ways to work money. They're managing other people's money. They got to get some kind of return, and Bitcoin is getting some nice returns. So you have a few of them that's speculating in it, while others are staying away from it because everybody knows the hammer is going to come. So if you're going to get in, you got to get in quick, get your stuff because the hammer is going to come. The government will sabotage and allow it to self-destruct, or they're just going to outright outlaw it. Now, we can take a look at China, who's probably 5 to 10 years ahead of America. They already have their central banking digital currency that's in their markets right now. Okay, so what governments have the ability to do is to make something legal. You use the money that you use now because it's law, okay? That's why you use it. So China's already showing you what it's going to be. They're outlawing it. And the reason why, because they have their own digital currency. You want a digital currency? Fine, we'll make one for you. We got it. Here you go. But it can't be Bitcoin because we can't control it. But the danger in this, and this is the Trojan horse, is that you see how China's set up. Don't think that America is far away from that. Okay. Listen, China's set up in again, this whole parental state. They want to control everything. You understand? There's no more freedom. It's the end of freedom. That's why I'm talking about the end of freedom. Like you have no autonomy, you have no privacy. So if you have a digital currency, this is the danger with digital currency. This is the reason why I advocate for gold, because at least you still get that privacy, you still have that control. They can't track it. They don't know about your gold. They don't know about this, right? But if it's in the computer world, you're toast. Everything is tracked and controlled. China's doing it already. And so what central planners like to do is control their economies. They control what you do. They can control what you can get access to and what you can't get access to. China has a social credit score system. So if you're, talking in a dissidence way on social media, they will block you from being able to take public transportation. How would you get to work? Okay, this is totalitarian control. Understand? This is the issue. And I understand, I told you guys earlier, Bitcoin stands for something that I agree with, like decentralized money. But the fact remains is that only one will rule. And if you think Bitcoin is going to overthrow the government, you must be smoking crack. Okay. There's nothing in history that will support that thesis. Okay. And so for that reason, it's just a logical conclusion that the government will outlaw it and ban it. And they give you their digital currency. America's working on a digital currency right now with MIT. Okay. And the only reason they have not banned Bitcoin yet is because they don't view it as a threat. Powell has came out and said it several times. Yellen said it several times. It's not a threat. Once it poses a threat, done. Hammer time. It's over. All right. So, and that is the whole understanding that you guys need to understand about it. So don't get caught up in all the hype. There's nothing that's changed. There's nothing that's going to change. Even technology doesn't matter. You got to understand the whole genesis of money, how money works, what's the origin, where it comes from, right? So I showed you guys these books here. If you want to take a look at yourself, all right, lots of answers. The geniuses have already done the work. You just got to put in the time to study, all right? But if you want to have some fun, you want to play casino, make some money, go for it. But don't marry it, all right? Because you're going to be the one stuck holding the bag. The whales, they already got their money. The guy who sold, exchanged a box of pizza for Bitcoin, I mean, it was nothing, you know? That's like it's a box of pizza. It's gone, right? I mean, that's a good deal, you know, for something that can possibly pop. So he took a good risk there. He didn't really, you know, lose much, all right? But just keep that in mind. All right, so other interesting news. Well, before I even get to that, here you go. There's another article here. It says 81 countries are now exploring central bank digital currencies. 5 CBDCs, that's what that stands for, central bank and digital currencies, fully launched regulation Bitcoin. And this is from Bitcoin.com. All right, so pro Bitcoin, they're telling you countries are moving. El Salvador, they embraced it. I know Bitcoin people put their laser eyes up. They were going crazy. It's El Salvador. You're talking about like, who cares? You're talking about China. China's banning. Do you not understand? China is like this. It's the second largest GDP in the world, and it's growing so fast. It's going to pass us. I mean, it's done this, you know, in, you know, what, the last, it moved all the way up to number 2 in a few years, like maybe 20 years or so. It's ridiculous. So it's a big deal if China's banning it. You got to understand that. And when the U.S. ban it, that's going to be the nail in the coffin. So it may stay around for now and people play around with it, but it will be crushed. All right. And if you disagree, offer your refutation. I'd like to hear it. Okay. All right. So that's what I have in the headlines here. Let's see what's coming down the pipeline this week here. We got on Monday, we had the Census Bureau release the durable goods report for August. New orders for manufactured durable goods are expected to rise 0.6% month over month to 258.7 billion. All right. So that's Monday. We just got one economic data that's going to be interesting, but not too interesting. Tuesday is going to be better, though, because Tuesday we get this here from Janet Yellen. So Yellen, she's going to deliver a keynote address at the 63rd National Association of Business Economics annual meeting. The theme of this year's confab, which runs from September 26 until September 28, is titled Shocks, Shifts, and the Emerging Economic Landscape. So Marcus is going to be paying attention to that. The conference board releases its consumer confidence index for September. That's also on Tuesday. And the Case-Shiller National Home Price Index for July, we'll get that also. And again, that's just looking at past data. But Wednesday, we get the National Association of Realtors releases pending home sales index for August. So again, we get a little glimpse at the housing market there. Thursday, we're going to get the Institute of Supply Management release, which is the ISM, their Chicago PMI for September. And then Friday, we'll get the BEA report of personal income and spending for August. Income is expected to rise 0.3% month over month, while spending is seen increasing 0.7%. So we're seeing spending growing faster than people's incomes, which is interesting. So this compares, let's see, with gains of 1.1% and 0.3% respectively in July. So that's interesting. People are still spending. And that's interesting because you got all these jobs that's gone. Unemployment is ended. Where are people getting this money from? Everybody's expecting people to go back to work. But I just don't think that's actually going to happen. And the way that they think that is going to happen, they're trying to force people to go to work. But then they also have other regulations that is countering that, like the vaccine mandates. OK, you got people that's just not going to go for it. OK, they're willing to just, lose the job. OK, without violating their, whatever their principles are. One of the things that was interesting, and what was interesting is, I don't know if you guys seen the stories about the shipping containers off the coast of California here. I know we had it here in the feed. I was trying to see if I could find it because I want you guys to see what this thing looks like. Here we go. Record shattered. 73 container ships stuck waiting off California. Interesting. Okay. So this is what you need to understand is that this is the school season. What comes after the school season? Well, we got Halloween that's coming up. We got Thanksgiving that's coming up. We got Christmas that's coming up. All right. So all those things are coming up. And so if you want to be able to get those things for those days coming up, you're going to want to go ahead and get those things now, because there are fears that there's not going to be anything there by the time, if you wait till the holidays, you're not going to get the things that you need. And it's interesting here, seeing aerial view of all of these container ships off the coast. It looks crazy. Like they just can't, all this stuff on backlog, back orders. You guys know we've been talking about this in the PMI data. Every time we review the PMI data, everybody's telling you shortages here, this, that, and the third, shortage everywhere. And then here you go, you have all the goods and services, all these goods is over here off the coast that they can't even get in to the people. And so the deflationists believe that this is going to help deflate the economy. I don't actually align with that view, because I don't believe they can get the goods off of these ships in a timely manner that can help it balance with demand. So I think we still have that out of balance mix of demand and supply. And I think it's still going to be inflationary. Okay. But that's interesting to see this play out. They say they had a shortage of, workers, shortage of truck drivers, shortage of everything to get this stuff out. And so it's just sitting out there. And you got to understand, it takes fuel for all of these things to operate, fuel off the ships for them to move. Okay. And that's not actually cheap. Okay. If you guys have been traveling lately, you'll see, fuel is constantly going up. So, but all I have to say about this is that you better go ahead and stock up now, because we are seeing empty shelves all over, and we're seeing a lot of things on backlog. So even when you're ordering online, you definitely want to make sure that they actually have what you have that you're looking for. I've ordered some stuff before. Me and Topaz was talking earlier about how we've been ordering stuff and can't even get it, so end up having to cancel your orders. So again, this is that chaos because of the interventionists, in the markets here. All right, so cool. With that being said, let's take a look at some charts here. Take a look at the S&P. All right, so we're going to go here at the ES. All right, so this is that big sell-off we were talking about. Now, coming into this week was kind of tricky, because what we were trying to figure out here was this dip session, this sell-off. Okay, we saw boom, rip, and look, it went right past this 100 moving average, but look what it hit perfectly. Okay, it hit the 127.2 extension on a Fibonacci. And once it hit that, the whole question was, and what I was questioning is if the dip buyers were going to come in and save the day. All right, so we saw the dip buyers that came in and level off right here. So that was, the prior week. Now coming into this week, we got, a continuation of that dip buy zone. So we have more that, bought the dip, and then it ripped. Okay. So we had a nice rip that's up in there. And now we see that it's compressing up against the 20 moving average, which is also in line with this 618 retracement here. So it's looking like it's going to probably trade sideways here coming into this week. It could continue, but probably because look at how it's bouncing up against that 618, struggling to clear that little level there. So be interesting. If it pops through there, then you're good. But I believe that we might end up, trading sidebound here, chopping up a little bit in there. So that's what the ESs look like. Let's take a look at the NASDAQ. All right. Same kind of situation in the NASDAQ. We see it compressing up there under the 618 right here. So again, we got that rip down here, come back up. And then, once it rip back up, people start going back bullish. And this is the interesting thing you guys got to understand where, you're trading with institutions, big boys, algorithms, okay? They have computers. And we talked about this in the group this week here because I don't want anybody to get the wrong idea about, patterns being a holy grail. They're not a holy grail. Okay. You got to understand patterns get ripped up all the time. So we see patterns that just give us confidence in our move, but it doesn't mean it's going to play out. And guess what? The easiest thing to program algo with? Patterns. They repeat. And so algos, they see these patterns. These patterns sometimes can be Trojan horses. They suck up money. And then the algos come in and rip them shits. All right. So just keep that in mind. That's why, nothing is certain in the market. So just keep that in mind. We cover patterns and stuff like that, but don't mean they're going to work out. All right. So that's the risk that you have to take, though. All right. So the NASDAQ coming up in that bound there. So it's gonna be interesting to see that. What is looking interesting is the Russell. Okay. So the Russell's been trading sideways. All right. You guys can see that. Iron condor all day in here. All right. And it's actually on a daily chart, we can see the moving averages that the price is, it's up again, it's up above the moving averages here. But if we take a step back on a weekly, okay, we can see that we're in a nice long squeeze here. So my question here is this thing ready to make a move? Okay, this squeeze got to come out some way. It's going to either go north or it's going to go south. All right. So we saw the last squeeze. What did it do? Well, it raised up a little bit, but then it died off. Got murked. Here we go again with another nice long squeeze. Question is this thing going to, be a bullish one, or is it going to be bearish? So this squeeze is actually a little long. So I'm anticipating this thing to make a move here pretty soon here in the next month. We'll see. So again, this is the weekly chart, but I'm expecting this squeeze to play out in one way or another here. Right now, it's just sideways here. Okay. All right. What else? Let's cover. I'll show you guys the dollar. Okay. And again, here we go with the dollar here. So what's interesting again here is if we take a look at how the dollar plays off here. It's like a nice little cup and handles right there. Kind of look like a cup and handles right there, Ryan, don't it? We'll see. But either way, what typically happens when the dollar is strong, we see the reverse happens for the markets. Markets normally go down and the dollar goes down. See the markets normally go up. And so we got the dollar here. It's in the overbought territory. It's in a squeeze here. Question is, will it, break this zone here, or is it going to turn bullish? Okay. Either way, I think you have to play the opposite of this move here in equities. Okay. And typically what you will see is, and again, safe havens, they normally work in opposite. You can play that parity off of them. You can play, stocks long, and bonds short. And then when bonds are long, stocks short, you can kind of see that play out. But when you go back and look at like Bitcoin, and so Bitcoin has been pretty interesting because what I noticed, and I normally run a side-by-side chart here, but I don't want to jam up the computer capacity here. But typically, not typically, but what I've been seeing here is that Bitcoin has been moving with stocks. Okay, not with safe havens. And so it is not moving like a hedge to stocks, actually. It's actually moving with stocks. So when seeing the stocks selling down like that, I'm seeing Bitcoin get ripped also. So I'm not actually seeing that dynamic of it actually working as a hedge. Okay, and you guys can see it right here. The same thing here. That rip down, and then you see it came up into its mean. And now it's getting rejected again. And so these are ways that, every dip isn't meant to be bought. Let's keep that in mind. Every dip isn't meant to be bought. All right. So that's the tricky thing. Which dip do you buy? All right. So again, when came into last week, it was kind of confusing of, hey, is that a real dip buy situation? and then we saw the move come in. If you didn't catch it fast enough, then you were the fool that they sold to, because again, they got out and it ripped really nice and strong, had a nice strong rip. So we had some good plays this week in the chat room in Snap, Nvidia. Those are some good plays. And then Tesla also. So, and we can take a look at that, but you guys can see same thing here. Bitcoin is trying to find its way here. Not quite calling it yet because we got some mixed signals. And so when you have mixed signals, best to stay away. All right. Because there's no telling what direction this thing is going to go. But the chart still is intact. If it breaks these resistance levels here, then it's in trouble. So the resistance, the support levels, which is the 200 moving average. Again, price breaks this, boom, you have that situation. If it holds, then Bitcoin is going to be good. And then it'll be a bullish move there. So I just want to touch that with you guys here. And then gold is in trouble. Not as bad, but let's see. Again, it's still like in this downtrend. And the thing about gold is that it doesn't like make huge moves. And so it's a nice, steady, slow grind. Although it's in still a downward trend. It's still fighting against those strong resistance lines up here that until it clears those, it's still going to be bearish here. Okay. What's interesting is that, it could have some kind of triple bottoms type situation up in there where it can break out. But again, we'll have to see. Have to see how that plays out. So, but again, right now, not looking too good, but it's slow and steady. Doesn't have crazy rips that'll give you a heart attack. All right. Cool. So with that being said, let's take a look at a couple of stocks from you guys here, and then we'll bring the session to a close. Start off here with Bank of America. All right. So the financials, we saw them actually, moving up pretty nice here. So Bank of America moving, bullish here, got a squeeze in there. Set to 786, so it's be interesting to see if it starts to rest here or does it continue. Typically, we'll see it try to like consolidate here. I don't expect it to bounce too hard here. We'll probably chop somewhere around in here before its next leg up, but it is in a squeeze in here. And we can piggyback that off of, let's see, Wells Fargo as well. So out of the financials, and again, the regionals are actually looking good. But even on the financial side here, we can see Wells Fargo has a little more defined pattern in there. The 100 moving average is held true. We know that's the floor. Caught a little buy trigger, but up against that 618. So the question again is that chop sideways? If it chops sideways here, it's probably going to chop sideways on the Bank of America. However, if it blows through, then I think that'd be good for Bank of America as well. And let's actually take a look at oil here, because I know we talked about energy being really nice. All right, let's get this thing to load up. Cool. Here we go, oil. All right. Oil had a nice rip way back in August. Since then, that low end, it's bounced all the way back to this level here. Okay. And we see this little squeeze aspiring long. See, the stochastic is still in that uptrend. We still got this uptrend here. It's going into an overbought territory. So the question is how far north do we go? Okay, I think we can probably get a 100% retracement up here at least, which would be like right around this area here. Would have push it up here. Okay, and that, if we get closer to that, then it's going to be critical that oil clears the most recent high, well, this recent high here, so which is basically $77. So if we clear that, then we're definitely on our way to 80. That'll be the next target. But when you take a look at those oil stocks, if you want to get some exposure there, you can see names like Hess. Okay, Same thing, is trying to break out above that 100 moving average. Okay, so that's one there. Another one, let's see. Marathon Petroleum. Okay, so and that's in the squeeze as well. Right there, that's 786. Okay, next stop will be the 100%. So it'll be around $65 on that one. So I'm looking at that. All right, what else we got on the menu here? Told you guys about Snap. This was in the chat room. This is a crazy play. Okay. All right, so there was somebody who was in the chat room this week. Was asking about the charting. And again, you know, I wrote a book a while back for you guys. If you don't have the charting book, if you want it, let me know. I'll send you the book. It's on the website as well. But they were asking questions about, you know, they thought they saw a pennant here. They wanted to know what's the difference between a bull pennant and a bull flag. And so just to kind of show you guys here, typically you see these with a nice gap like this. And so you see that like that, it will be your flag pole. Okay. And this is the main difference. Pennants, they normally squeeze into a narrow point like this, okay? And the difference is with flags, they're normally rectangles, okay? So you see the rectangle like this, and is a bull play. Once you recognize the pattern, you got a buy trigger that's here and lift off. That's the way that works, okay? Again, doesn't mean they're always gonna work perfectly, but this one worked out for us this week in the chat room. And we had this nice long discussion in there because people ask questions. And so you can't learn if you don't ask any questions, right? I mean, unless you know it all. But, you know, it was a good question that someone asked. So I just figured I'll show you guys that situation there. The play was like, it was really nice. You guys can see it played out. All right. And let me cover this one real quick for Terry, because I know he was looking at the Tesla play. And Tesla had a nice breakout on Friday. And so this is another situation that we were looking at here, trying to figure it out here, you know. And so you can see, you know, the nice little wedge up in there, okay. And so I didn't really know how to play it here, but I can see it starting to wedge in there. And so what ended up happening, again, because it's looking like a pattern, and you get those algos and everybody there rip that thing. So it had a nice rip up right into this this little zone here, which is this Fibonacci level here. So it hit that target right there. So again, we'll have to see, you know, if it's going to continue from this zone here. It hit that perfectly, actually. And so we'll see if that continues, or is it a trap where it sucks in premium, and then you actually get the play that it's supposed to look like the way the pattern plays out, right? So that's the way the pattern plays out, right? We'll have to see. Again, if it breaks out, if this continues, it can break out of this little wedge here. So we'll have to see. All right. But that's, you know, looking like a little bearish situation, but it did have a nice rip on Friday. So shout out to those who made some money off of that. All right. What we got? DHR. All right. Danaher Corporation. Okay. Interesting one here. Okay. We can see that from this high to this low right here, we can see that the 618 price is trading under the 618, which is a key level of resistance. And if I can may actually make this stronger here. All right. Okay. And we do have a conflicting signal in here that says, okay, sell off, right? Kind of just like this one in the past. Boom, sold off. So the question is, does this sell off and obey that signal? Or because it's in this squeeze mode here, and we got some stochastic uplifting here, it's going right into its dividend payout and earnings up ahead. Those events there. The question is, does this go bullish or not? Well, I'm not too clear on the direction on this one. Let me see if I can get a step back though. All right, so step back to the weekly. Looks like we're definitely in an overbought territory. on the weekly. You guys can see the out of bounds areas right here above here. You see on the weekly, again, everything is super high. Had a nice run here. So when you have a nice long run like that, you'll normally get that blue, that momentum to shift like that. And so on the weekly here, and we can see it bounced far away from the mean. Now we see it coming back to its mean here. So could be bullish, but when I take a look at the weekly, I'm expecting some more air to come out of this thing here. So that's just my expectation. I could be wrong, okay? But when I take a look at it and I step back like that, I have to take a look at it from that perspective. So it may be one of those squeezes that may, you know, it could play out later up into when it gets closer to earnings. But as of right now, I'm not seeing I'm not convinced on the bull case yet, because again, that 618 is a key resistance zone right here. And until price break that area, I got to look bearish on it for right now. But if it breaks that area, and again, you can set an alarm right here. You can just go in here, click it, set an alarm for it. So if it does break it, you will get the notification. You can get quickly to your station. You can make a bullish trade. Okay, you can continue, you know, with your notion on that one. So, but if not, then again, I think it could be bearish. So be careful on that one. All right. What else? Who was eating at Cheesecake Factory this weekend, man? Like, I gotta know, man. Like, who was eating at Cheesecake Factory, right? Little Cheesecake Factory right there. You know, I was trying to figure out why that popped up on my radar like that. It was Reese. Reese was eating at Cheesecake Factory. I know it was you, Reese. You was eating at Cheesecake Factory. Haven't been there in a minute, actually. And they got a crazy menu, right? They serve like everything at Cheesecake Factory besides cheesecake. But anyway, this is a nice little ripping Cheesecake Factory. So I don't know who was eating at Cheesecake Factory, but the play was clear as day on the weekly. Okay, boom, hit that support. You saw the momentum shift, turn yellow, boom, right? Look at the RSI shifting. That was cool. So I didn't get no Cheesecake Factory, but one of y'all was eating at Cheesecake Factory. Spill the beans. All right. And again, so again, I think that the plays to look for in this week probably be in the let's see, consumer discretionary. Might, yeah, on a daily chart, we got a little squeeze that's in there. It's struggling with this little zone right here, but it's in a squeeze. Struggling with this zone. Okay. And with this squeeze in here, it could, you know, break through. We'll have to see. So look for some plays there and energy. And financials could break out if we see Bank of America, you know, make a move. But I think that what Jonathan says in the chat room, he says, this is September to remember, right? So a lot of people have been hands off. And it's been a real treacherous September. I think that a lot of people just are ready for October to get here right now, because September's been treacherous. So if you haven't been participating, I don't think you really miss much. It's been a very treacherous month here. So I've been playing it real lightly right now. Yeah, so with that, again, make sure you guys check out Wallstreet Jackboyz website right here. Make sure y'all get in the group. I told you guys about the Legends and Gurus, the movies, films, and documentaries. Okay. Even crypto, for those, you know, crypto enthusiasts, there's a spot for you there as well. Okay. Not discriminating on anybody there, but there's a place where you can actually share all your crypto information, and it's welcome. Okay. But yeah, definitely tonight, checking out Billions. Okay. Movies, films, and documentaries. Make sure y'all get in the group. And, you know, with that being said, we'll go ahead and bring the session to a close. I'll see you guys in the chat room tomorrow, and we'll pick up where we left off at. Y'all have a great weekend. Peace.